morning. Today is Friday, December the 8th. The time right now is 3 minutes past 9:30 in the morning. Overnight, we have seen sharp movements in both equity markets and in currency markets. Today, we're going to spend a bit of time to talk about the dollar versus the yen. The Japanese yen has been on a roll for 4 weeks in a row ever since it failed to take out the last year's highs at 152. You can see just 4 weeks ago, dollar yen was pretty strong and was looking on the verge of breaking last year's high. However, 4 weeks have seen the turnaround in fortune for the dollar yen. The yen now is so strong that it is flirting with 140 levels. So you can see the market has actually fallen quite a fair bit in the dollar yen. Last night low was 141.60 on the back of the BoJ governor, a guy called Kazuo Ueda has made comments that provide the clearest signal that the Bank of Japan's ultra loose monetary policy is about to be reversed very soon. And this comes on the back of the deputy governor of the BoJ, a guy named Ryozo Himino, also saying that there is a good possibility that the Bank of Japan may exit its ultra loose monetary policies very soon. So on back to back, we can see major officials of the Bank of Japan has actually hinted in no uncertain terms that the history of ultra loose policies by the Bank of Japan is about to end, and this caused a massive unwinding of long dollar yen position. And we have seen that the dollar yen has been bought up. Basically, the yen has been so cheap, and it is the only central banks around among the G7 that has not raised interest rates. So we can see the interest rate differential between the Japanese yen and all the other major currencies has been tearing the Japanese yen apart, and this is a total change in market understanding of how the dynamic works in the currency markets. Japanese yen is increasingly looked upon as a funding currency, which has fueled a lot of equity markets because everybody is borrowing in Japanese yen term and returning back the loan in Japanese yen in the depreciation currency. And of course, the interest rates near zero has been the fuel that leads to the the carry trade. So we can see this massive unwinding of dollar yen position probably is not over yet. So the drop here has been a lot sharper than I expected. The low at 141.60 does not appear to be the ultimate low. Tonight we have non-farm payroll, so I think market traders has been a little bit more cautious. They want to buy back some of the most recent short position. So I think upside, there is the possibility of the market going back up to 147. Ideally, that it will be the level in which the market actually started to drop vertically. So nearby the near supply area is going to be at 144.80 to 145.30. So this will be the most nearby area pockets of resistance. Beyond that will be at 147. Typically, it was at 146.80 to 147.50 levels. So do look out for these two levels to provide further supply of sellers into the market. I think the low here is probably going to see 140 in a very short time, possibly next week. So do look out for further losses in the dollar yen trade. And this is all I have for you for today. In the meantime, you take care and have a great weekend ahead. Bye-bye.